is everything based on past situations? So you see a pattern, and the statistical probability is based on, okay, this pattern occurred 1,000 times before, and 650 times this happened. Is that what it's like? You're using past situations and generating a probability, and then betting based on that probability?
Well, the probabilities already exist. You have websites with every pattern and with the probability for each pattern. So this already exists. There are already people doing this. And about me, yes, when I'm trading, it's always about past experiences, what I've seen before. Yes, I've seen this before, and how did it go? It went that way, so I have to be cautious there because I got trapped here. There was a bull trap, and blah blah blah. So yes, it's always based on past experiences, always, all the time.
Oh, okay, so I've heard people compare, and you might have said this to me already, but I've heard people compare day trading, even with fiat currency, but it seems like it would apply to crypto. They compare it to gambling or betting.
No.
Betting money in a casino. Like you're betting based on probabilities, but this is what I wanted to say, and then you can respond however you want. I could be totally wrong because I just have a general understanding of gambling on a few different games. I have no understanding other than what you're telling me right now on crypto short-term trading. But in gambling in a casino, let's say a game like blackjack, you are betting on statistical probabilities of what's available in the deck, what cards other people may have, what cards that are still in play with the dealer, and the behavior, your outcome of a certain card hitting the deck is in almost all situations not based on the behavior of other people. So someone could decide to hit the card next to you. They could ask for cards more than a smart player would, and maybe that would affect the cards available in the deck. But if you're playing a game, let's say one-on-one with a dealer, and you're really fucking pissed off for some reason, or you're dealing with, an irrational dealer, or something happened in the market, that doesn't affect the card that gets pulled. You're going to get a 7 of diamonds no matter what. If that was the next card, there's no way around it. If the dealer said hit, he would get that card. If you said hit, you would get that card. If the person next to you decided to hit, you get the 7 of diamonds. In trading in the market, you have the behavior of other people that gets all conglomerated into one mishmash and generated out into a number, which is the value of the coin or the value of the stock. And people's emotions come into play. They patterns happen, but it's not just based on what's available in the deck. It's not just based on the numbers that are available for the currency to peak at or to drop to. So how can you, I guess what I'm asking is, how can you have a reliable way to invest in something like a cryptocurrency or fiat currency, a stock, on a day-to-day basis or a week-to-week basis when you're also dealing with irrational and unpredictable emotions?
Well, the first thing, it's, as I said before, money management. So when you make a decision to trade, you must also think about protecting yourself of that kind of thing that can possibly happen. Because yes, it's true, you can have a big crash, people selling all at the same time for some reason. So yes, so money management, it's very useful for this, and putting stop limits and take profits as well, because the price can change very, very quickly. When it comes to predicting that sort of thing, like in trading, you have two main things. You could say you have fundamental analysis and something we call chartism or technical analysis. Fundamental analysis is basically seeing the news that are coming out about Bitcoin or about whatever cryptocurrency, and trying to see what kind of effect it might have in the future on the price and that sort of thing. I don't do fundamental analysis. I only do chartism. Because the reason for this, it's because most of the time on the chart, you can see that there is a drop that's likely to happen. It's visible on the chart. For example, you have some kind of levels, and if the price closes below that level, you know that it's very likely that the price will drop, and a lot sometimes. So you can take advantage of that. So for me, it's more reliable to just see the chart, even though it's not 100% reliable, but the patterns usually are right. And as I said, sometimes you cannot be right. You cannot be right all the time in trading. It's not possible. Because sometimes the market just does what it wants. Sometimes it goes below that level and reintegrates the previous pattern. And you cannot predict that. It's very hard to predict sometimes. So the money you earn sometimes, it's not about winning every trade. It's about winning the good ones and also preventing not allowing the situation where the price would drop too much that at the end of the month, it would lower your income. So it's doing both, right? It's doing like when you see the pattern, the probability, it's taking this opportunity, but also, you know, like that's where the traders lose money sometimes, right? And if every pattern is not 100% reliable, it's because of this, because there is some irrationality out there happening. And that's where the margin of error is. But you can limit the money you lose if you manage your money well and say, okay, this pattern has a 60% chance of going up and 40% of going down. So you know here you have good probability of earning money, but also a big one of losing money. So it's your responsibility to be aware of the risk you're taking, because trading, it's about risk, but it's about managing risk properly.
So let's say you taught me what you know about charting, because that's what you do, the charting, as opposed to the fundamental investing. Mm-hmm. Let's say you taught me twice a week for an hour about your technique to invest in crypto. How many weeks would you say it would take for me to become serviceable at investing to the point where you would feel comfortable telling me to use real money? If you put in 2 hours a week.
I don't know, because I haven't taught that to anyone. So I don't know. But I would say, just like this, if I have to give you an answer, absolutely, I would say at least 8 or 9 months.